Pi Network's verification deadline passes while Solana inflation reduction proposal fails amid mixed market recovery. This is your AM Pulse for March 14th. 6 minutes starts now. Bitcoin is showing resilience at $83,175, up 2% in the last 24 hours, while Ethereum struggles at $1,866, gaining a modest 0.47%. The broader market remains cautious with the Fear and Greed Index dropping to 27, down significantly from 45 yesterday, indicating renewed uncertainty despite price stabilization. The headline story this cycle is the fascinating disconnect between narrative strength and price action. Despite mixed price performance, Layer 1 blockchains have reached their highest mindshare level in our dataset at 41%, up 7.69% in just 24 hours. Similarly, AI mindshare has surged to 4.17%, nearly doubling from yesterday's 2.18%. This divergence between sector interest and price performance often precedes significant market shifts, suggesting smart money positioning while retail sentiment remains cautious. We're tracking Pi Network's critical verification deadline that passed yesterday on Pi Day, coinciding with a dramatic 70% price surge to $1.74 amid Binance listing rumors. Users who failed to complete KYC verification now risk losing most of their Pi holdings, except for balances mined in the last 6 months. Technical issues with the verification process caused significant frustration in the community, with many users reporting being unable to complete the process before the deadline. Adding to market tension, Solana's SIMD 228 proposal to reduce inflation by approximately 80% has failed to pass despite receiving 61.4% support, falling short of the required two-thirds threshold. The proposal would have slashed SOL's inflation from 4.7% to approximately 0.87%, potentially eliminating over $3 billion in yearly sell pressure from validators. With 910 validators participating and 43.6% of stake abstaining, the failure maintains Solana's status quo monetary policy and tokenomics. Meanwhile, the SEC has postponed decisions on multiple altcoin ETF applications until May 2025, extending the regulatory timeline for XRP, Solana, Litecoin, Dogecoin, and Cardano. Despite these delays, Franklin Templeton has filed a new XRP ETF application, joining competitors like Bitwise, Grayscale, and 21 shares in the race for approval. The extraordinary gap between narrative strength and price action represents a classic divergence pattern that often precedes significant market shifts. Despite mixed price performance, Layer 1 blockchains have reached their highest mindshare level in our dataset at 41%, up 7.69% in just 24 hours. This flight to crypto blue chips suggests investors are seeking relative safety in established blockchain infrastructure during market turbulence. Similarly, AI has seen explosive mindshare growth to 4.17%, nearly doubling from yesterday's 2.18% despite continued price weakness. This surge coincides with Pi Day celebrations driving interest in Pi Network and other AI-related tokens. The divergence between price action and narrative strength suggests potential accumulation by forward-looking investors positioning for the next wave of AI integration in crypto. Meanwhile, the tokenless sector continues to gain mindshare, reaching 9.97% as investors seek exposure to crypto infrastructure without direct token price risk. This growth reflects increasing interest in companies and projects building blockchain infrastructure without issuing tokens, potentially benefiting from regulatory clarity while avoiding direct market volatility. Bitcoin is showing resilience above 80,000, with positive funding rates indicating improving sentiment. The 4-hour chart shows BTC testing the $85,000 resistance level with increasing volume. Long-term holders have accumulated 131,000 Bitcoin in the past month, while 36,000 Bitcoin were withdrawn from exchanges, signaling strong investor confidence despite recent volatility. Critical support remains at 80K to 82K, with a break above 85K, potentially triggering a rally toward 88K to 90K. Ethereum is showing early signs of stabilization at $1,866, with a critical $1,850 support holding. The daily chart shows the ETH to BTC ratio beginning to stabilize after reaching multi-year lows, with positive funding rates suggesting potential short covering. The RSI at 35 is approaching oversold territory, creating conditions for a technical bounce. However, ETH needs to reclaim the psychological 1,900 level and then the significant 2,000 resistance to confirm a meaningful recovery. Solana has rebounded to $123.65 despite its inflation reduction proposal failing to pass. The 4-hour chart shows SOL testing resistance at $125, with the SOL ETH ratio maintaining a bullish trend despite negative MACD signals. Positive funding rates indicate improving sentiment, though significantly lower than Bitcoin's. The failure of the inflation reduction proposal maintains Solana's current 4.7% annual inflation rate, which could continue to create selling pressure compared to other L1s with lower inflation. All eyes will be on Hyperliquid's implementation of a 20% margin requirement effective today, following a high-profile incident where a trader using 50x leverage on a 175,000 Ethereum position triggered a $4 million loss in Hyperliquid's HLP vault. The platform has already reduced maximum leverage to 40x for BTC and 25x for ETH, and today's change aims to prevent similar incidents and protect protocol stability. This could impact trading volumes and potentially create short-term volatility in the derivatives market. Watch for potential Pi network developments following yesterday's verification deadline, particularly any official announcements regarding a Binance listing. The extreme price volatility of 70% suggests significant speculative interest, but technical issues with the verification process could impact community sentiment and potentially lead to a price correction if the Binance listing fails to materialize. Token unlocks for Starknet today and SEI tomorrow could create localized selling pressure. The Starknet unlock represents 2.33% of supply, while SEI's represents a similar percentage. These unlocks, combined with Arbitrum's unlock on March 16th, could impact broader market sentiment during this critical recovery period. Consider the extraordinary divergence between narrative strength and price action in Layer 1 and AI sectors, which could present asymmetric opportunities for contrarian investors. The extreme fear readings historically present favorable risk-reward setups for those willing to accumulate during periods of market uncertainty. Focus on sectors showing strong mindshare growth despite recent price weakness. The AI sector has surged to 4.17% mindshare, nearly doubling from yesterday despite continued price weakness. This divergence suggests potential accumulation by forward-looking investors positioning for the next wave of AI integration in crypto. Monitor Hyperliquid's new margin requirements closely as they take effect today. This significant evolution in DeFi derivatives risk management could set new standards for the industry and potentially impact trading volumes and market dynamics in the short term. The changes aim to prevent cascading liquidations while maintaining platform stability, which could benefit the broader DeFi ecosystem in the long run. That's your AM Pulse for March 14th. I'm your host, reminding you that in markets that never sleep, neither does information. We'll be back in 12 hours with your next update. Until then, remember that in crypto, narrative often leads price. The divergence we're seeing in Layer 1s and AI could be tomorrow's opportunity. The market's mixed signals reflect both opportunity and risk in this transitional period. So stay liquid and keep your keys close.